Charles Schwab announced this week that it's going to allow its customers to buy and sell fractions of shares, a strategy designed to attract younger investors who are more familiar with stocks like Apple or Amazon or Chipotle that have high prices. Joining us to talk about what this means for individual investors and for the brokerage industry, Andrews Jones is the co-founder and CEO of the financial planning firm Facet Wealth. Andrews, thanks for joining us tonight.
Hey, Bill, great to be here. Thank you.
You're not a fan of this for individual investors. Why?
So I think it's an interesting innovation for an investment product. It is kind of cool for people to be able to own a share or part of a share of a company like Berkshire Hathaway, which is largely inaccessible to most Americans. But by and large, the vast majority of consumers really need a diversified portfolio, and they shouldn't have a concentration in any one particular equity. And so I think it's an interesting move by Schwab, but I think it's largely meaningless for the vast majority of consumers. Also, I think there's another point which is important to make, which is that it's possible to have this sort of fractional exposure currently through exchange-traded funds. Right. And so that sort of mechanism already exists.
You know, there are those also who are critical of this type of a move because they say it encourages investors who should be long-term invested to buy and sell shares. And it's, you know, even the pros have a hard time finding the right in point and the right out point, and it could actually be detrimental to their financial health.
Yeah, I mean, I think that for, again, the vast majority of consumers, it really needs to start with thinking about your long-term financial goals and taking a more planning-centric approach, and then figuring out the investments that make sense. And so, again, for most folks, day trading or trading in and out of equities in a short-term time horizon is really not supportive of their longer-term goals. So again, I always think that consumers should come back to planning first and then figure out what investments make sense in order to support the long-term plan.
But to be fair, Charles Schwab is saying what they're trying to do is broaden the net to reach those people who would otherwise not feel like they could afford to invest in companies that they're familiar with, as I said before, like an Amazon or, you know, any of the FANG stocks that are out there that they use their products. They want to buy those stocks. What about that?
Yeah, I mean, I think that's a fair sort of a marketing approach. I would, again, go back to the argument that you already have exposure to those stocks through ETFs. It's not the same as logging into your Schwab account and seeing the Apple ticker symbol there in your portfolio, but you know, you can have a broadly diversified portfolio and still have access to all of those stocks.
Understood. Andrews Jones with Facet Wealth. Again, thanks for joining us tonight.
Thank you.